Binance announced their exit from Canadian markets, citing new regulations to be enacted shortly. I think after collapse of FTX, some sort of checks and balances are required, especially when it comes to investors' hard-earned money. Hi, my name is Sunny, and a quick like, share alongside smashing that like button will be highly appreciated. Binance, now world's largest cryptocurrency exchange, announced recently on Twitter that they are pulling out from Canadian market. Stating further, the communication said they do not agree with the new regulations that are coming up but will keep in touch with the regulators going forward. Founded in 2017, it is a privately held global company whose founder is popularly known as CZ, a Canadian of Chinese descent. Surely it came as a surprise to many, but experts have been expecting some sort of tightening or regulation around such digital trading platforms. Since 2022, some sort of restrictions were put in place on them in Ontario, but now Binance is withdrawing its services Canada wide, citing a regulatory framework that is changing at home. Early this year, the Canadian Securities Administration CSA came up with a new set of guidelines for digital trading platforms. When FTX collapsed late last year, both investors and regulators were caught off guard. For sure, this technology is way ahead of regulations that are in place, so lawmakers were working overtime to protect investors. Under new regulations, these trading platforms can't allow investors to buy or deposit stablecoins without a regulator's prior approval. The fact remains, it's hard even for big auditing firms to properly audit these trading platforms. At least that is the basic reason behind collapse of FTX. Over the past year, Binance has got increased scrutiny from North American regulators. As a result, they are clamping down operations in this region. Rapid collapse of FTX in about 10 days revealed why regulators are concerned. On December 6, 2022, Binance arrival to FTX sold all FTT tokens. Next day, FTX tried to raise capital while facing liquidity crisis. November 8th, Binance announced intent to buy non-US business of FTX. 9th November, after due diligence, it backed away from buying FTX. The following day, FTX's Bahamas assets got frozen. November 11th, it filed for Chapter 11 bankruptcy protection. On November 12th, suspected hack of over $450 million reported at FTX. And finally, on December 12th, Bankman-Fried got arrested in Bahamas and extradited to US, where on December 22nd, released on a record $250 million bond. To reassure investors, Binance came up with proof of reserve concept where they intend to bring more transparency. For sure it is a good start, but industry experts believe that alone is insufficient. I think just mentioning a reserve does not mean much if there is no independent audit to support that figure. After experience of FTX, now investors want more transparency that is audited by a reputed third party. Also, Binance as a private company is under no legal obligation to publish its balance sheet, which will not go well both with the regulators as well as investors now. That is why at least Canadian regulators are enacting more legal framework to increase transparency to safeguard investors' interest. Frankly, from Great Depression to recent collapse of FTX exchange, I agree morally companies have an obligation to safeguard investors' interest. But historically, investors have lost money with all sorts of investments. That is why regulators are always watchful while updating the rules. As of now, both crypto and blockchain technologies are new and unregulated, thus more prone to investor losses. When over $450 million were hacked from FTX accounts during its collapse, these unauthorized withdrawals of investors' money have raised many eyebrows in unregulated environment. Exchanges are basically custodians of investors' money, hence pilferage of that by anyone is bound to accelerate regulatory clampdown, thus new enactments. I believe trading platforms should be transparent and must be audited by third party because they are merely custodians of investors' money. The fundamental job of a regulator is to set the rules where the paramount focus is safeguarding investors. In case of crypto, I think regulations have not caught up with new technologies. Surely self regulation is a recipe for disaster because it leads to conflict of interest, and clearly Binance or any other player for that matter will not like it. So, some sort of regulation is a must while maintaining anonymity, which is the bedrock of Bitcoin technology. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. And don't forget to do your own due diligence. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.